Hi Udayan, can you share your inputs on the future prospects of BHEL and SAIL, government PSUs, and what should one do in terms of way forward? Should one sell, hold at current market levels? Please guide. Thank you.
I've never been a big fan of BHEL over the last many years. I think it's a stock which will continue to disappoint long-term shareholders because there are too many things stacked against it. I think BHEL's bread and butter is the thermal power business. And I think capital expenditure there is on a structural decline. People are just not adding thermal capex capacity, the NTPCs of the world. And therefore, to expect BHEL to do well is going to be very, very wishful and optimistic. And that you can see that in the order book, which is not growing at a good clip at all for that company. So the structural problem is one of its core business actually doing pretty badly. And on top of that, you've got this big receivables problem for BHEL, which is basically that the state PSUs and the central PSUs don't pay up on time, and BHEL has always had to struggle with that. So bad demand issue with a bad receivables problem, and on top of that, a very bloated workforce makes for a really poor investment bet in the medium term. Periodically, you get these rallies. You saw one last week as well, and a few months back, BHEL had worked its way back to about 80 rupees. I would say long-term investors would probably do well to use these rallies to exit and look at better companies in the infrastructure space. SAIL is a better one because globally steel prices are going higher. It's not that Indian steel prices are going up or have that much upside from here on because they're almost at import parity now. And on the other hand, the situation is complicated by the fact that coking coal prices have been going up. So SAIL's margins might come under pressure, already are under pressure this quarter onwards. So because of margin pressures and limited upside ability or price raising ability, I would suggest that maybe Tata Steel or JSPL are better bets in the steel space to look at compared to SAIL.
Saurav Jana has also written in from Kolkata. He holds Affle. Let's listen in to his portfolio query.
Hi, I'm Saurav Jana and I have a question for you that I hold Affle India shares and I am confused whether I should hold it or sell it when the share prices will go up.
No, Affle is a good company actually. It's a unique company because you don't have too many companies in the listed space of that nature. As you know, because you are a shareholder, that it's part of the mobile advertising sector in the digital space, and it measures the effectiveness of digital ads in the online environment. So Affle makes most of its companies from sectors like edtech, fintech, e-commerce, gaming. Those are the kind of sectors, and these are all sunrise sectors. So growth should not be a problem for Affle. I think it will continue to grow at 35–40% over the next 3–4 years. There was a small issue of late as Google changed some of its privacy settings, and that led to concerns on whether Affle would be able to effectively monitor the effectiveness of advertising, digital advertising. But I think those concerns might be a little overblown from the commentary that we've been getting from the management here and overseas. So the stock has corrected a bit. It was 1500. I think it's down to about 1250 or 1300. So the only issue is, of course, how expensive it is. Because it's in a high growth sector, that you won't find the stock below 60 PE, and that's a steep one. So periodically while you might see corrections depending on the mood of the market, but structurally and fundamentally Affle is a good company in a good space. I don't think it should worry longer term investors like you.